Welcome to the next episode of the Property Legends of South Africa, and really the main focus of these sessions is to have a conversation with individuals who have had a profound impact on the South African commercial property. And we really hope that you will find it useful and that you will pick up that the property story is not just about the IRR as much as we often think so. There are decisions that get made, and what we really wish to achieve in this series is that we go down into the decisions that are made and the people behind the property market. So in this particular series, we have with us David Rice from Redevelopment Properties, as many of us who have known him over the years in that function, and a prominent company, of course, in the South African commercial property space, and especially in the real estate investment trust, the REITs. So let's start the discussion. The interviews will be undertaken by Rob McGaffin and myself, Francois Viridi. David, let's start. Okay, so where did it all... In fact, our careers crossed at a particular point for a few years. But
yes, that was in the 90s, if I'm not mistaken.
Yes, it was in the 90s, yes.
So what happened with me was I did a gap year. I was one of the original guys that formed the gap year. And I came back from overseas and I needed a job. And I saw an advert in the paper and I ended up joining a company called Citiplan, one of the founders of which was a guy called Mark Weiner, who I'm sure you know. And I worked with Mark for some time, and then from there I moved to J.H. Isaacs, and I actually had 2 stints at J.H.I. And then towards the turn of the century, I decided that it was time for me to move on. In fact, I was sitting in a restaurant with my wife, and I said to her, I think I've had enough, I'm going to resign tomorrow. And she said to me, typical, you're just whatever, you've had too much wine or whatever, and I resigned. And that was it. And about 2 days later, I had a call from Minds Pension Fund, and I started a business, a property management business, essentially out of part of their portfolio. And we had that for a while, and then we sold it. And
so that was Melrose Arch as well? Or?
I consulted to Melrose Arch.
Okay.
Yeah.
Okay.
In addition to that. And in fact, a funny story with Melrose, we did the very first office lease in South Africa over 100 Rand a square metre. Yeah. And at the time, what people didn't know was that we knocked off 3 Rand because there wasn't a crash, another 4 because of the hotel and a gym and whatever. So in fact, the lease said 107, I think they paid 85, but it was one of those things. And then from there, we sold the business, and I ended up at Brol for a short while, and at the time, Brol were given the management of the Apex High portfolio, which was being put together by Gerald Leicester, ex-Anglo, and controlled by Mark. And you may remember Apex High was referred to as the junk portfolio. It was properties all over the country, from Kathu to Thohoyandou to the Cape to Richmond. Wherever you could think of a property, we were there. And then there was a merger between Apex High, Madison, and Redefine, and that's what. And I was been with them since 2010. And I'll tell you a funny story about that. Along the way, Gerald Leicester and I decided that, in fact, Apex should buy Redefine. So one day we took off to Standard Bank, and we suggested to them that they'd got this wrong. And by the time we got back to the office, we had Mark Wayne and Wolf Sessman standing at the door waiting for us. They were,
all the big names in the property market over the last few years.
Yeah, correct, yeah.
Well, I suppose it would have been Stuart or Taylor and everybody there who
was the guy we went to see. Yeah,
would have been part of that, etc. You've obviously had a long career now, and you were saying offline that you're still involved with Redefine going forward. But some of the highlights.
So, I mean, a highlight for me was obviously being involved with my own business, but I think it was the growth of Apex and Redefine that were real highlights. Apex High, we were buying portfolios of buildings at 30, 40 a time, and to manage it was an absolute nightmare. And that was from all over the country. And we built that business to about 10 billion rand back in the early 2000s. And there were 10 of us that ran the business. And it was done very differently to today. We would take the lease agreements with us. We'd go up to Toy and Dough. We'd meet with the local owner of the spa, and we would sign the agreement there and then, and we'd move on, because otherwise we would never have been able to run the business. And then obviously the growth in Redefine up to today, and pre-COVID was essentially 100 billion rand of investments.
And you think the value, I mean, obviously you contributed in so many ways, but do you think your history and at JHI and property management, etc., helped you to handle those portfolios in the way that you've just described?
Yes, I do, because I think that to run a portfolio like that, you have to have the operational background. And I think what property management does is it gives you that, because you're involved in every aspect of the business.
It's the business of the property at the end of the day, isn't it? I mean, that's what I often say even to my students. You've got to run a business. It's not just, the financing, yes, is one issue, but their tenants, their leases, their operating costs.
Have we lost a bit of that? Yes. That sort of hands-on understanding of what the product is?
I think you are seeing that. I think that there's a lack of those sort of skills in the industry, and I don't think you're seeing that coming through. And I think today in the big companies, the focus is on the financial and the ESG and risk. And I don't think that there's enough focus perhaps on property per se.
Right.
And it's a problem because, how does somebody come through the ranks and learn about that? They need mentorship.
No, absolutely.
And I'm not sure that there's enough of that in the industry.
Talking about that, David, I mean, over the last 20 years, I mean, you mentioned the growth of the REITs as being, well, what are some of the critical changes that you have seen? I mean, whether it's the structure, I mean, I remember, I suppose, decentralization. I mean, I came a bit later at JHI, but I think you were in the city center. The JHI, I think I arrived when the movement to Rosebank had happened. But maybe just to reflect a bit over the changes you've seen in the property market over there.
So one of them, and you've touched on it, was the change in ownership. And if you go back in time, ownership sat in the hands of the insurance companies and the likes of Anglo-American. And of course, then along came the REITs and the expansion of the REITs. And so there was that movement. The other thing was you've got a lot of unlisted funds who own large and families that have got big investments, particularly in the rural areas. So that was one of the biggest changes.
And the change from the property unit trust PLSs to the REIT structure, has there been a big change on the back of that?
Where I think the change has come is in specialization. So I think if you look at some of the REITs, they're either retail focused or one of the other sectors. And then of course you've got the specialization in skills. So that's been the movement. I always say that you have a lot of retail employees who understand property. There are not many property people who understand retail. And that's a problem in the industry.
David, more recently, I mean, we've also seen this movement of portfolios into Europe, which you've, I suppose that's one of the trends that we've seen as well, where it was a very local game until fairly recently. I mean, not all the funds are out, but quite a number of funds have got exposure in Europe at the moment. Yeah.
And predominantly Eastern Europe.
Yeah. It's always interesting. I've always wondered, why East Europe? Do you have an answer? I mean, there's some people I've heard people say, oh, well, it's because the South Africans have got a different risk-return profile than a German investor has. Or, to be maybe unkind, once the Germans and Swiss and all the others have looked at it, maybe the South African will look, I don't know,
what, I think South African companies were looking for diversification. I think Eastern Europe was an opportunity because of the EU. Yeah. They get grants. The infrastructure is good, you know, and good economies.
And you could borrow at attractive rates compared to the yields that you were picking up in some of those markets.
Yeah.
You could borrow at 2-3%.
Correct.
Yeah, but when you were buying those properties, were you competing against the Germans and the French and the Swiss, etc., when that was happening? Because I've always tried to understand, you know, what do we know about those countries or those properties that the Germans don't? And maybe it's a case of, well, they did, but
maybe
we're
let's
just
have that
completely
discussion,
different.
because I suppose it's a fairly big deals that you were involved with. Maybe this is the point to talk about some of these bigger deals that you were involved with in your career.
So I mean, we acquired EPP, Ekopolska, and I'll tell you how it came about. I mean, we were actually in the UK watching rugby. We had taken clients across, and Mark bumped into these Polish guys, and they were interested in selling this portfolio. It was about 8 billion rand. And the next thing we know, they were in South Africa. We were showing them around what we do. And there were apparently 15 bidders. We were one of them. And we had to act fairly quickly. I think most of those bidders were South Africans. There were very few bidders from outside of Europe. And in fact, one of the issues, once EPP had been listed in Luxembourg, was to find European or American investors, essentially to support the price and whatever, and to spread the ownership.
Right.
And that was actually has been pretty tricky to get that achieved. But in any event, I mean, we bought EPP. We were talking earlier about property and making decisions and
we'll
whatever,
get to that. I'd be interested to hear that we move away from the financials. But
we bought EPP. We essentially went to Poland. We split the country into 3. I had the German side. And we looked at the portfolio, and we came back and we put our heads together and we decided to buy the portfolio. And I think we pipped a few other companies in South Africa to the post, so to speak. But that's how it came about. And it all happened over probably 10 days.
Wow. So your ability to move fast.
now that leads to an interesting point, which we will get to, and it's always fascinated me, is how intuition, how we make decisions. But just to get back, are there in your career things that stand out where you say, you know what, these were the big ones. This is, and I suppose successful. Some may not have been successful, but
we acquired Fountainhead, which at the time was a property unit trust, as you know.
Yes.
And Mark and I were in the States, and we wanted to buy the business, and Growth Point were competing with us. And we realized that the way to get to the business was through the unit trust management company. So we bought the company. I'll never forget, it cost us 600 million rand. We bought the company, and then we had control. And then we started buying up the shares. And did we make mistakes? I'll tell you where we made them. Once we had control, I was trying to convince the other guys, don't buy the rest of the shares. We had, I think it was 30%, plus we had the management company, and I was saying, leave it. Let the Fountainhead shareholders fix the properties, because they needed to be fixed. And in fact, we can talk about Centurion Mall. We spent 900 million rand there over the last four years. Now, the Fountainhead shareholders should have fixed that. So I was pushing, unsuccessfully, to get our guys to leave it as a minority shareholding, but force the management. Because what had happened was they hadn't maintained the buildings, it was poorly managed, and their shareholders benefited from it in the short term. So that was one of the... and then, funny enough, Arrowhead came along. That was Gerald and I were keen to try and put Arrowhead together. It was essentially another Apex High. And I guess because we'd been so involved in Apex, we spoke about it for some time, and then he went off and he put the fund together. And that came out of it. And we sold them 100 properties, I think it was, for them to kickstart Arrowhead.
Okay.
But I think you make an interesting point here, and it's the one around, you mentioned the term shortism view. Is there a problem in this sector that, we go from quarter to quarter, and this is a long-term business? I mean, how do we reconcile that? Do you think it's an issue?
Yes, it is an issue. And I think that it does pressurize attitudes and time.
It pushes decisions in in certain directions, which would have maybe be done in different. It's something that I've wondered about. That one of the issues of listing, of having the REITs defined, but you're reporting and you've got interim results, and you're playing the financials. Now you can say, well, any company has to do that, but still in the property game, I think you are.
I mean, take Redefine at the moment. Yeah. So the year end was August. The board meeting was beginning of November, so you have to have all the results, presentation, etc. out. The annual report is busy being finalised now for next week, and then in January we have to put the reports together again for the February board meeting. And those are the issues. Yeah.
David, it comes back to the question that I have around the transactions. The skills that we need in order to make good. And you've just related the story of. I wouldn't want to say it was done on intuition, and it interests us for our students as well, coming through programs which are often heavily finance driven. What are the skills that you would be looking for from a property person, and what do you think those skills should maybe entail?
So look, I guess they have to have some sort of financial acumen. I mean, I think that goes without saying. Mm-hmm. I think that they need patience. Mm-hmm. I think they've got to realise that supposedly Rome isn't built in a day. It is a long-term investment, and I think that they need to be confident, and they need to trust themselves. Mm-hmm. It's because at the end of the day, if you're going to do a deal, I say that most people, this is maybe an unfair thing to say, don't see the deal. Okay. They don't, and I
Can you explain that a little bit more?
Don't see the deal. I think that's an interesting concept.
Yeah,
I mean, it's that.
I think it's the intuition that you talked about, where you can sit down, be at a leasing deal, and you see an opportunity to structure something. And most people don't. Most people look at things on a vanilla basis. Somebody's lease expires, they're paying X, we want to try and get Y, and off they go. Okay. And so it doesn't happen. Look, we've had, over the COVID period, we've had to structure leases very differently to the way we would normally. Okay. And I think that a lot of people have probably learned from that.
So what you're saying is to go beyond the rental and the escalation, and then people run out of ideas.
Yeah.
They don't even get to number 3 or 4. The permutations of, like you say, seeing the deal and saying...
Or coming up with an idea and saying, well, hang on, I can structure this differently. And they've got to have the confidence to be able to actually go and do it. Look, they've obviously got to have the backing of the company to give them the mandate. But those are the things that we lack a lot of, I think, in the industry. Yeah. There aren't enough people who are capable of doing that.
How do we get that? Is that time? Is that mentorship?
It's mentorship. No, it's mentorship.
Yeah. It's mentorship.
It's mentorship. That's it is. It's.
I don't think it's the universities or the courses that we're going to offer that in, but it's to. It's the shadowing. It's
and the mentor's got to put in time. They've almost got to go through the deals with somebody and say, what else can we do? How else can we approach this?
I suppose somebody's got to be, and the company's got to be prepared for somebody to make a mistake. I mean, as long as it's upfront and it was done for the right, if it was done for the right reasons, you've got to be able to make the mistake.
Our attitude was, obviously, we hope to make more right questions than not. Sure. But if you made a mistake, the issue is identify it as quickly as you can, and then let's fix it. Yeah. And then you'd work together and you'd come up with a way and you'd fix it. And that really was our approach.
It's an interesting point. It's the point that I often make about family businesses that were successful, because in a family you can make a mistake. You're not going to fire your children. Well, maybe you will, but there's this ability to make mistakes, and of course you don't want, within reason, but I think it opens that opportunity of doing something new, to look at the property market differently. David, looking ahead, I think we've looked at the past. We've seen a sector. We've seen the decentralization. We've seen the REIT sector growing. And as you said, I think what's interesting is the more focused funds. I mean, there's been talk about we've got hospitality, but I suppose hospitals, and there've been quite a number of opportunities that have been looked at. Where do you see the future of the South African property market? I mean. 5 years from now, 10 years, do you see significant changes ahead of us? The way we're going to think about property, the way we...
There's a lot of discussion as a result of COVID, what's going to happen with offices, for example. And I think there's a lot of knee-jerk reaction. I don't think that we're going to see offices emptying out like some people are reporting. I don't think that's going to happen. I think a lot of it's going to be dependent upon the economy. And I think with a weak economy, it's going to be very difficult to support property going forward, or probably any sector. I think that looking forward, I think that you're going to have to come up with ideas as to what happens with different types of property. I think that you're going to see nodal degradation is going to be a real problem, and I'm not quite sure how. There's going to be a lot of money having to go into supporting that, because it's not going to happen from local municipalities. And I think it takes Sandton as an example. Sandton currently has close to 20% of its space vacant. Now it has close to 2 million square meters of space. How do you fix that? And now there are areas of Sandton which are really run down, and the area and the space is vacant. I think that's a cycle that's going to be very difficult to overcome.
And of course, it becomes interesting who the next tenants are, and what they can pay. And before you know it, you can find yourself in a very different scenario. Or we move. But I don't think the property market. We moved from the CBD to Sandton. But there's risks. What do you leave behind? What do you? Sounds a bit extreme.
But maybe not. Maybe Midrand becomes the next hub. It's fast developing.
But
then,
is the strategy then around the redevelopment of stock?
No, I think the cost is just too great. It's going to be to redevelop. I think most people have looked at res, and again, I think we're sitting with an oversupply. I think the residential that will work, but again, it's costly, is the hotel room, where you develop 18, 20 square meter units and you let those off. I think that will be successful. The infrastructural cost will be large, obviously lifts, aircon, etc. But I think that there's a market for that.
That's interesting that you say. Sorry, Frans, if I can carry on with that, because it's often been punted that sort of for the next little while that the game is in residential. But I know you got out of Australia, etc., with one of your residential portfolios there. Was that because you just needed to restructure your balance sheet, or was that because you didn't like the sector?
No. It was to do with balance sheet and trying to make the business easier and more simple. We'd often been criticised because we had investments in a number of different countries. That's all.
But it has been interesting. Criticism that has been levied at the REIT sector in South Africa to say, if we want to invest overseas, well, I'm going to buy some funds there. I don't need you. And I'm not suggesting that it's the case, but there is. There are people on the ground there who know. But it also leads me then to the question. Fairly recently we saw about 80 to 90% of all capital raised in South Africa going to the acquisition of properties overseas. So I suppose the question looking ahead that we need to ask ourselves is: will the REITs be foreign REITs with an exposure to South Africa rather than the other way around? If we carry on at this rate, it becomes interesting what it all could look like in the years to come. I'm not asking you to comment on it necessarily, but it's: are you in South Africa or are you elsewhere? And do the numbers stack up here, I suppose?
I think the risk factor here is too great for overseas companies to want to invest here. I don't think that would happen.
No, because we were talking about the future. There's been a lot of talk about prop tech, fintech, ESG, and I suppose blockchain technologies and what they can mean. And will we have people buying a redefined share on their cell phone for R1? The farmer in Limpopo decides tomorrow, Well, I suppose what I always say is that you can buy, and not a redefined share, but you can buy shares at 50 cents at the moment. But anybody can get it fairly cheap. You can get into the sector. What are your views on, is this property market going to look very, very different? Is this the end of the broker? Is this the end of, are we going to see an automation of these processes? And
I think you'll see automation, but I don't think it's the end of the broker or the market or whatever. I think that the technology will be utilized by a different skills base, if you like. It will remove, and I think that it really is about the interpretation and the implementation. And you're seeing it coming through. I mean, if you talk about retail metrics, that's been ongoing for some time, and there are some very good systems in place. And today you couldn't run a retail center without that sort of supportive technology.
Okay.
And I think that you'll see more of that. It's the way that warehouses are set out today. Essentially your warehouse size is almost dictated by the equipment that you can use inside the warehouse and how you can move goods around, et cetera, So I think that all comes into play, but I think that it really is about the implementation.
Yeah.
I actually think that there will be job creation as a result.
Interesting. Okay.
Just also talking about the future, but to pick up on a point that you made earlier, David, you talked about declining sort of commercial nodes, et cetera, what is going to happen there. We've seen the increase in the ESG things. I mean, a lot of people are saying, developers are city builders and hence have a responsibility in that place. Redefine's been quite heavily involved in Soweto and places like that. What is your views around the whole sort of ESG movement within the sector?
Look, I think it had to come. I think it's the right thing. I think it's positive. And in fact, today, you may not be able to do a deal if your ESG credentials are not acceptable.
It's the investor who's asking for it.
And tenants. Particularly international tenants.
Oh, okay. So they won't take green. They want a green lease or something that at least.
Absolutely, yeah.
Let's speak about operating in those sort of environments. And that, you bought Mopanya Mall a while back. What's the story behind that? How did that come about?
So we own 51%. We acquired the 51 along the way, and it's been a great investment. It's a very successful mall, and it will continue to be. There's been a fair amount of churn of tenancy over time, but I think that it's settled.
It's finding its.
But were there lessons learnt along the way there? Were there any particular lessons that you think you learnt?
I think perhaps we learned lessons around the area. I think that it's not just a typical mall in the middle of a Sandton CBD. So I think you learn that your customer base is different, and perhaps you've got to approach the management of a centre like that differently.
Okay.
Let's move on a bit. I think we've looked at the market. We've looked at the decision making. Are there individuals in this sector that have influenced your thinking? Are there individuals that stand out and say, what, I'm going to do it X's way or Y's way, or that have driven you a bit in your thinking? Or
I would imagine Mark, probably, because I've known him for so long.
Sure.
I started working with him back in the 80s and worked very closely with him. So yes. And he had his own style of thinking.
Can you share that at all? He passed away, but everyone knew, and I suppose we always had the stories back of the matchbox type of thing. But he could make quick decisions.
You see, his whole focus was a positive one. If somebody took a deal to him, and for most people it didn't work, he would find a way of turning it around.
Right.
That was what. Now they weren't all great deals, but that was his approach. And so people knew that if they took something to him, he would come up with ideas. And that was his approach.
So it comes back to your point of seeing the deal, of almost visualizing that and finding your way through it. I mean, is that...
And he would come up with some really novel concepts. And that's why a lot of people went to him, because they realized that he would think differently to them. So I guess Mark, Gerald to a lesser degree, but Gerald Leisner. I was telling you a funny story about Gerald. Gerald's the one guy I met who his answer to a question was the shortest ever. So if you asked him a question like you just asked me, his answer would be yes.
A nightmare to interview, in other words.
Absolutely.
Gerald came to Ampros, that's Anglo-American properties at the time. So he came from a more institutional... I mean, anybody who worked from Anglo, I want to be fair to Anglo, but you almost had to come from Cambridge but looking at new graduates, what sort of advice would you give a young person entering the sector? It could be around the skills that they should be building up. Here you are, a young graduate entering the sector.
Look, I think there are a couple of things. Firstly, they need to be patient. They need to understand that things are not going to happen in 24 hours. I think they need to stick to their guns and be focused, and fully understand what it is that they want to achieve. They do need the mentor. They have to have a mentor in today's day. I think the skills, look, obviously the theoretical skills they'll get by coming through varsity, so they'll have those. A lot of it after that becomes application and personality. I always say about people going into property management are the plasticine people. What I mean by that is that whatever happens, you get knocked down every day. You've got to get up again and put yourself together and get on and do the next, the next deal or whatever it is. I think if they can develop deal-making abilities, then I think that will stand them in good stead. But I think perhaps when you come out of varsity, there's quite an array of opportunities, whether you go into property management, asset management, whatever. And I think that they need assistance there up front as a kickstart.
You mentioned property management. I've heard it said in the industry that there are not enough property managers or well-trained property managers in this country. People move from one job to the next and they just get paid more as they move up. But we're actually running this on a very thin property management skills.
Absolutely. And what's happened is that a lot of people are in positions that they shouldn't be. They've risen through the ranks, perhaps a little too quickly. And I think that's harming the industry. You know, it's funny, if you go back to the 80s or whatever, you did everything. If you were a portfolio manager, you were the legal advisor, you were the financial guy, you did everything. You signed the leases, whatever. And as time's gone on, so of course you've now got specialists in all of those divisions. But the overall responsibility sits with the portfolio manager. And I think that there's a shortage of good portfolio managers in the country. And they come through the ranks of, the property management ranks. And they really need to be all-rounders.
And since we're on that topic, that view with the REIT structure of bringing the property management into the REIT rather than having it, which was the case often, that the investors saying, well, we don't see the property business here. And the property management company set out. I know that it has altered over the years, in or out, or I think just on the same rhythm as the property cycle, just about. But your views of in or out, or?
Look, I was responsible for taking ours in, so but that was a while ago. I think the best route is a combination of both. I think the important thing, and the main reason why we took ours in-house, was that you are too far from your tenants. That's your business. And if you've got an agent in front of you, or in between you, you don't get to know the tenant. And that for us was the big issue. And so by taking it in-house, we could develop those relationships. And I think that was the right thing.
Has it played out like that?
Yes, it has.
Okay.
And I remember Marco was saying, at the end, it's the tenant. It's your relationship, and I remember him saying it. It's your relationship with the tenant. I don't know if it came from you and whether he quoted it, but it doesn't matter. But it's that, and I think we lose that relationship a bit in the sector.
No, absolutely. No. There's no question. If you don't have that relationship, during COVID, because we had to renegotiate leases, we saw around 85% of our tenants. We've got 4,500 tenants.
Sure.
So we went through that process. Now, it was an unintended consequence. We've spoken over the last 6 months to virtually our entire tenant base. Now, in the main, we've given them assistance. So hopefully going forward, that's impacted on our relationships.
Right.
In theory, that means that you should be able to retain your tenants. So there's been that process. Now, of course, it's a matter of following it up. If that hadn't happened, we probably wouldn't have seen some of those tenants over 2 or 3 years.
Yeah, no, that's it.
But it is. Your tenants are your lifeblood.
Yeah.
You touched on it a bit earlier on, Francois, but maybe just on the property management side in particular, the role of technology going forward and how that's going to impact on property management? Or not?
No. It will, and it will, and it
Will
has.
you have a real-time, almost view of? Can you, as David look at your screen now and know exactly where you are at with everything?
And there have been a lot of different systems that have come into play. One area which is very important is, of course, information to brokers to do deals, and so technology in that area is absolutely tantamount. You have to have it. Because you have to be able to give that information to somebody, or they have to be able to, as you say, pick it up off their phone at any point in time.
So the information to the brokers, etc., through the technological...
Same as building management systems.
And the tenant, on the flip side, can see it.
Correct.
It can also see exactly where they're at.
Yeah, correct.
Okay, I think we're going to start wrapping up. Rob, did you have a question before?
Yeah, just something that we started to touch on, and I just thought maybe we have got a bit of time. The whole notion of mixed-use developments, and you were involved in some of the early days of mixed-use developments, Melrose Arch, etc., etc. Your views on mixed-use development per se, and some of the lessons that may have been learnt along the way, and going forward, what would you see doing? Would you see, for instance, Redefine doing more of them or less of them?
So I think you're restricted in terms of where you can do them. Obviously, you need a large piece of land. You could argue that Sandton is a mixed-use development because it's got everything within walking distance. I think for the time being, there's not going to be new development for a while. So I don't think you're going to see new mixed use coming up. Okay. I think that some of those that have come up have been successful, not all. But I think we're in a bit of a crossroads from that perspective going forward because there's so much pressure on each of the different sectors. Look, I think a lot of them have been successful. I mean, Melrose had its ups and downs. Elements of it have been successful. It's still, I wouldn't say it's successful as an environment, totally. And I think that people will prefer to look at one sector only. Yeah.
You say some have been successful and some haven't. Do you think, are there any key lessons there that you think, in other words, you need to do X, Y, and Z, otherwise something won't be successful?
No, I think you just need to have the right mix. I think that you need to know that if you go back in time with Melrose, the retail component is not big enough. Yeah. So, and you don't have the support, the numbers of people that would support it. So it battled for some time.
Yeah, it's finding that position. And then the sequencing, I suppose. When does your residential come in?
Yeah. Correct.
And those complexities. Okay, David, I think the final question really is, what can we expect from David Rice in the next 5-10 years in the property market? Where will we see you? What can we expect?
So the use of the word retirement is not on my radar. That's that's
good to know.
Just a
good
word.
To know.
And thank you. No. I mean, I plan to keep on working in the industry. I'm still with Redefine until the end of February, so certainly, that's where my focus is at the moment. But yeah, there are a couple of other opportunities, perhaps in the retail environment. Perhaps I can get involved with a couple of smaller retail companies. So yeah, I'm still going to be part of the property environment.
Is that where your interest lies, in the retail space? Is that a particular side of the property sector that you like?
It's probably the one with the biggest challenges at the moment.
Yeah, but yeah, no, it's just an area that I like. Yeah.
David, thank you very much for the discussion. It really gave us an opportunity to drill down into the mechanics of the property market. We often talk of the property market and it becomes a financial discussion. So I think it's always good to be able to have a discussion at the coalface. And who, like you said, at the end of the day, it is about the tenant. It's about that relationship with the tenant. We often say, where's the investor? Where's the developer? And we forget that ultimately, why would somebody come to this property? And I think it was also Mark who used to say, properties have got personalities. I don't know if that came from him, but I certainly remember. But it's true. Buildings have personalities. People like buildings. People don't like certain buildings. I think all of that. But I think we've been very fortunate to be able to spend an hour with you in picking up, as I said, 40 years of experience. These are many years of experience that you'll never pick up in a textbook. You will, it's the people who've done the deals
and enables one to do the deals in a short space of time, like your Polish example.
And what we forget is that at the end of the day, it's the city builder. It's the property people. These cities are built by people like yourself, the investors. What people see when they drive in the car, whether they like a building or don't like a building, or they become landmarks, that people remember.
Hopefully landmarks for the right reasons and not the wrong reasons.
No. But I suppose that is property. You like them, you don't like them. But thank you very much for your time, and I'm sure that those who are looking at it, the younger viewers who are entering the sector, that you will also have found this useful. Rob, a few words?
Just all the best for the future, and hopefully whatever you do in the future, you don't have to report on a quarterly basis.
Maybe you will be involved with something where...
Maybe there's somewhere I can help you.
Oh, well, don't be careful of opening that door. At universities, we bring people in, but I mean, the best people let's say, how do I put it? And I don't want to sound unkind, but we treat our best people like racehorses. We bring you in when we need you, and we make you run. And we don't do it too often. And we get the best people in, but we know when that is required. And of course, the important thing is from universities often is that at universities we're often not doing the deals. I mean, we're doing something else. And so that relationship between the town and gown becomes so critical for everybody concerned.
So I think David's point also about the importance of bringing young people through and actually mentoring them. There's a huge role for people to play in that regard.
And I think there's a lot we can still do. Thank you very much.